So in this video, I'm going to talk to my first hater turned millionaire. Stay tuned! What's up, Tim Sykes, millionaire, mentor, trader, traveler, philanthropist, here with Michael Good.
Hi.
You can see that we're a little bit different. That's beautiful. You've now made $2 million roughly trading penny stocks. You hated me at first. How does it feel now?
Feels fine. I like you well enough.
Let's talk about, life has changed a little bit when you make, some good money, right?
I guess, yeah.
Life is good.
Yeah.
Do you agree with that?
I have not had to worry about money.
Yeah. And how does that feel?
Feels nice.
Michael is very talkative.
I am very chill.
No, it's good. Just be yourself. This is totally natural. You hated me at first.
I did think you were selling some snake oil, yes.
And how has that changed over the past, a decade or so since you've been studying this stuff?
Yeah, 11 years now.
Crazy.
Since I first came across you and wrote that blog post.
Crazy.
And
he wrote a blog post that said, Tim Sykes is full of BS. We're going to link it below because it's a beautiful blog post. I love it. We went back and forth in the comments. You can still see the comments.
Yeah, it's fun.
Yeah. So what's changed over the past 11 years?
Well, obviously I've traded a bunch of penny stocks, and I was fairly quickly won over to you.
Yeah.
Then I did a couple subsequent blog posts talking about, I've changed my mind about Timothy Sykes.
But I think it's kind of funny that you wrote this post and then you became my first millionaire student, and frankly, I helped you a little bit with timing, but you also know this stuff, so I didn't teach you from scratch.
Right,
There's other students who I've taught from scratch, but for me, as long as my lessons and these patterns and these rules can help people in any way whatsoever, whether you know a lot or whether you know nothing, whether you start with a lot, whether you start with nothing, I'm just trying to share my experiences because, frankly, I've had a lot of experiences. And now you've had a lot of experiences too, right?
Yeah.
You have some interesting penny stock stories.
I've been doing it for a while, and I've seen some crazy stuff. Yeah.
Explain, let's talk about we've done a lot of videos. You've talked a lot about a ton of stuff. We have a whole DVD, Learning to Read SEC Filings. It's very useful. It puts people to sleep.
Yes.
Have you noticed this?
Oh, yeah.
Have you gotten those comments?
All the time. Nobody has told me that it's exciting. Everyone tells me it puts them to sleep. It's okay.
But it is very important. It might put you to sleep, but if you learn to read these SEC filings, you're a better trader, you're a better investor. Yeah. But people just don't want to do the digging. Why do you think that? Why don't people want to read these 70-page legal filings?
That's
to
why.
me, this is fun. It's the weekend. Today, it's the weekend. I'm like, let's go read some SEC filings. What are you going to do? Oh, wow, 74 pages? I prefer 100 pages plus. Do you think that your success in penny stocks is related to how much time you're willing to put into your research?
Yes, definitely. If you're not willing to put in the research, you're not going to be successful in the long run.
What do you think about people where they just want money fast?
They should go get a job, really, because they're just going to lose money trading. If they have some initial success, and you've talked about this a number of times, people that start trading and then immediately start making money, they are the ones that are going to have the hardest time because
they learn the wrong lessons.
They learn the wrong lessons, and then they think they know everything very quickly, and then they start losing money, and then they lose a lot of money usually.
So you're a co-mentor in the Trading Challenge.
Yeah.
We're going to post a link just below this. You help mentor literally thousands of students. What are some of the attributes that you see in the most successful students?
The most successful students, first, they're willing to put in time, and I think the big thing for me is the type of questions they ask, how they approach studying. It's not just about trying to say, okay, well, what does the people that are successful, they're not going out and saying, okay, what would Tim Sykes do here? How would Tim Sykes trade this stock? Because nobody is Tim Sykes except for you.
Yeah.
And they say, okay, well, why is Tim Sykes doing this? Why is Michael Kidd doing this? Why is some other successful trader doing this? What is his process? Why is this working for him? And then they say, okay, well, this is what I need to understand. I need to understand how the process works. What is exactly his edge? And that's a big thing. I mean, people will say, okay, I need to trade stocks. I want to learn how to make money trading stocks. But one thing we need to talk about over and over again is, what is your edge? Why are you going to make money? Or are you just going to trade randomly and expect to make money? That's not going to work. I mean, the market is not 100% efficient, but it's pretty darn hard to make money just trading. You need to have some sort of edge, something that you know that other people don't know. Maybe you're faster than other people. Maybe you understand things better than other people. Or maybe you just read the charts better than other people. Or you do research and you have some clue what is going to happen.
Yeah. What do you think Tim Grittani's edge was? Because you were the first person, I remember like a text where you're like, this guy Tim Grittani's asking really good questions. What was his edge to start, and what do you think his edge is now? Because Tim Grittani is our most successful student. He has gone far beyond him and myself combined in trading profits. You know, he just had a baby. He's still making $1 million through 6 months this year. Like, he's like, yeah, I've had to adjust. Like, I'm not doing my full thing. And I was like, you've made $1 million in 6 months. He's like, I know, I took some months off. Like, that's a bad thing. Like, wait till you see this interview with him. He's like, yeah, you know, I haven't been sleeping as much. But he's made $1 million. What do you think his edge in the beginning versus now is?
In the beginning, I still remember that pretty clearly. And he would pester me in private messages and chat. And the question, again, lots of people ask me questions, but it's the questions that he would ask me. It was all him trying to understand what was my process, what was my thinking behind certain trades, not trying to figure out whether I thought a trade was good or bad, because a lot of traders do that. They'll ask me, oh, what do you think about this stock? I'm like, and most of the time I'll say, I have no clue. No clue, because it's not the kind of thing I would trade. Why are you looking at this stock in the first place, and what makes you think that it might be worthwhile for you to trade it? But really, it was all looking into the process and trying to understand the reasoning and how I go about forming trade ideas and making trades.
And so that was him in the beginning. What do you think his edge is now?
Well,
why he continues to make millions per year even while having babies and taking months off?
It's just because he's really systematic about things, and he's always done, I mean, something that I really taught people, even back in when Tim Grittani was getting started, was that you need to follow your trades, track your trades, really understand what your edge is, why or what strategy you're using, how things are working or not working for you. And he's really done that more than I've ever done for myself. And he'll look at new trading strategies. So when he was buying pump and dumps back when pump and dumps were hot in 2012, 2011, he did well with that. Then he started moving over to trading a lot more NASDAQ stocks as the pump and dumps got sort of crushed by regulators. He put a lot of effort into studying the NASDAQ stocks, what kinds of moves were predictable, and understanding, well, okay, if a stock goes up 3 days in a row, is it likely to drop the next day? And that is how he was able to become successful doing that, and how he's still been successful, is that he is not just doing things by his gut. He's researching and understanding the actual likelihood of moves. And
he's learning from the market based on the success that he sees and his own success. So this is what's interesting. We're going to post a link to Tim Grittani's full interview. We just talked to him for an hour the other day. Pretty amazing. He is learning from not just what strategies in the market are working, but he looks at, okay, did I capitalize fully on this strategy? It's kind of like, Moneyball. Are you familiar with Moneyball, where they analyze baseball? Most baseball stats is just okay, here's how many home runs does the player have, how many hits. But if you hit a ball really hard and then the outfielder just makes an amazing catch, yes, you're technically out, but you still hit that very well. And Moneyball looks at those stats. So Tim Grittani, it's not how much money he makes on a trade. It's like, did he take 3/4 of the move? Did he take 1/4 of the move? Did he, was there no move and he shouldn't have been in the play very often? Like, that is the kind of way that you have to think about this. And most traders, sadly, don't think about this, especially newbie traders. They're just like, is this a good company? Should I buy it? Is this a good pick? They don't think about, like, what is the probability on first green day or the probability on, like, a 7th green day? Like, I get questions all the time, like, what do you think about this stock, Tim? I was like, when have I ever bought a 7th green day stock? Like, why would I do that? I have problems buying 2nd or even 3rd day. I like first green day, What is your favorite pattern in the past year or so?
In the past year, really, there have been a lot fewer of them, but shorting pump and dumps has worked well just because they've been getting absolutely destroyed.
Yeah.
The few that have been had any sort of success with regulators cracking down. A couple of weeks ago, the SEC suspended trading in a few of them, and OTC markets marking stocks with their skull and crossbones or caveat emptor. That has had the effect of tanking pump and dumps when they get that designation.
And that's good. This is a pattern that worked. I really don't short these that much because, number one, there's scalability issues. You can't find that many shares to short. Number two, there's expenses and fees involved. And number three, which is the killer for me, there's patience required. I don't have patience, okay? I really like dip buying morning panics. And this is kind of funny because a lot of the people in the challenge chat room, a lot of my top students, like, they're shorting, for that first big crack. And I'm waiting for that big first crack and I'm dip buying or I'm trying to dip buy. And we're trading the same stock, but we're trading it slightly differently. And that doesn't mean that either one of us is wrong. Like, you can make money on the way down. I make money hopefully on the bounce. Hopefully the bounce is big enough they can re-short, stuff like that. So I love that, since we started teaching, I mean, this has been roughly like years now. I feel like the market has gotten, obviously it's shifted, no two markets are exactly alike, but I feel like there's been, I would say, more liquidity with a lot of these low price stocks. Not necessarily pump and dumps. Pump and dumps are,
with the NASDAQ stocks.
Yeah, exactly.
Yeah, there's insane liquidity in some of them.
I mean, 50, 100, 200 million shares every single day. And I'm like, this is madness.
Yeah, a few years ago, the big runner that's up 100%, 200% on news might have 10 million shares traded. And now it's doing 50 million.
Now you're seeing what I've been talking about lately, too, is like bigger short squeezes. Like before, stocks would go from 1 to 4 and then crash back down. Now we're seeing like 1 to 7 or like 2 to 10 or 2 to 20. Do you think that there's more short sellers in this market now?
Yeah, because you and I have been successful.
We've popularized the strategy. Yeah. That's what's so funny. We've actually made people see, oh, wow, you can short sell penny stocks. When I first got started teaching, people said that it was illegal. Brokers that couldn't find shares to short would just be like, you can't short sell penny stocks. That's illegal. And I was like, I've been doing it for years. Like, it's legal. But you just have to find the shares.
Right.
So it's kind of interesting where you and I have popularized the strategy of shorting, and now there's more shorts, but I think a lot of newbie shorts that short too soon.
Well, there's just a lot of people shorting big running NASDAQ stocks because it's become pretty well known, thanks to you and me and other people, and Tim Grittani certainly, that you can make good money doing it.
Yeah. But now it's very crowded.
Yeah, it's a crowded trade, and that means you're going to get a lot more
squeezes,
choppiness, and then certainly as those shorts get squeezed, you get big moves.
So this is part of the reason why I really don't short that much. Forget my fees, forget the impatience, forget the lack of borrowing. Like, it's crazy. Like, it's more complicated. Before, it was so easy where you could just be like, look, short the 3rd day, short the 4th day, like 90% of the time, like, it works. Now, sometimes it's like the 7th day, sometimes it's the 10th day, because people are shorting too soon on the 1st or 2nd day. Because the problem with shorting is that even when you think, okay, it's definitely going to turn around, there might be no shares to short. So you have to anticipate that by a day and risk some pain, or you can try to box. And I suck at boxing. Are you good at boxing?
No.
I have yet to meet a trader who's good at boxing. But that's the only way that you reduce your risk. And boxing, for those of you who don't know, it means taking a long position in one account, shorting in another. So that way, if the stock keeps going, theoretically, you're protected because you have your long account. And if you do it right, you short when you can find shares to short. Then as the stock goes, you're profiting on the long side. And then when you think it's about to tank, you sell your long, and then you profit on the short side. So you make money on the long and you make money on the short. Have you ever done it well?
I've occasionally done it well, but
not consistently.
Not consistently.
Yeah.
No. It's just hard to get your mind around it.
Yeah.
Because you need to sort of think to yourself, okay, well, I'm not going to sell the long until I'm absolutely sure I want to short.
Yeah.
But even though you're flat, you still have it in your mind that I'm long. I don't want to be long if it might break down.
And sometimes when I've tried it like, I don't know, maybe a dozen times. And I'm like 3 for 12 or something like that. But the losses are bigger than the gains because when I sell the long, I'm like, it can't go up anymore. But then it goes up more. And then I'm like, damn it, I sold my long. And then I have to cut my losses because it just keeps going because I have no more long to protect me.
Right.
And then sometimes I wait too often and I can't sell the long. And then it's panicking. And I'm like, no. So I miss out on all of the upside. And then by the time I'm out of the long, I'm out of the short and it's basically break even. And I'm just like, this sucks.
Yeah.
I like dip buying. I like morning breakout. So for me, this is what I've learned. I've adapted to the market. You've adapted to the market. When I say you've made $2 million, it's not like on one stock, it's not one strategy. You're adapting.
Yeah, it's like I've averaged like $200,000 a year for the last decade. So.
Why do you think people have such a hard time adapting to different strategies, different stocks, different sectors?
It's just hard. I mean, it's hard to change, and that's something you constantly need to be doing.
Yeah.
Because the things that are making me money nowadays, a lot of times they're not the same patterns or strategies that I was making money on a few years ago. Now, I am still shorting pumps and making money doing that, but a lot has changed about that.
It's different size now.
Different size. The liquidity is very different. The stocks are different. The research that goes into it is different.
Yeah.
Understanding when to short is different. There was a stock just last week I completely messed up. That was LQWC, LifeQuest or something.
Okay.
And absolutely should not have shorted based on the chart because it was a really strong chart. It was up for like 8 days in a row mostly.
Yeah.
And then it gets the caveat emptor or the skull and crossbones from OTC markets.
Yeah.
And then the next day it drops, ends up down 50%. And I missed out on most of that, but it's very different. I would not have ever considered shorting it a couple years ago.
Yeah.
But I was sort of about to short it, and I should have been shorting it. Now, just because I should have anticipated the caveat emptor.
Yeah. So the caveat emptor, explain that for a second. Just what it is.
So OTC markets, I guess they run OTC stock trading in the U.S. and all the stocks that trade OTC, you go to otcmarkets.com and they have information on the stock, and then they've had this program on the last few years, I guess. If there's big promotion on the stock and there's questions about the company, about
credibility.
If the company seems not very credible, they'll mark the stock with caveat emptor, which of course is Latin for buyer beware, and they put the skull and crossbones on it. And yeah, it is just a thing that says buyer beware, but it is a way of notifying people that, hey, there's something wrong with this company or with this stock, something going on. And people do pay attention, and also brokers do pay attention to this. So the people that are selling the shares that might be running a pump and dump, they're going to get more scrutiny from their broker after the stock gets marked caveat emptor. So that's why I think we see a lot more stocks dropping after getting marked with this.
Do you think maybe they shouldn't use a Latin word? Because they're trying to protect the dumbest, most naive people.
That is...
you have to explain what this is. The skull and crossbones, that's a good sign. But
it's a good sign, but having a Latin phrase is sort of silly.
These pump and dumps take advantage of the dumbest people in the world. They're not going to know what caveat emptor. They're going to be like, oh, I'll have one of those where we're eating at a French restaurant. I'll have a caveat emptor, please, with some sauce on the side. They won't know.
So, for example, there was this one, the same stock, LQWC. They have zero assets, no assets whatsoever. It's not like they don't have any book value.
Yeah.
It's just they have no assets. They don't even have a bank account.
Yeah.
And you can look that up on OTC Markets website really easily, but still, they had a $100 million market cap at the top because people are just being idiots and being.
Well, they're being lied to. They're being marketed to.
they're-
So the promos push the stock up. Whoever pays for the promo is selling stock along the way. Hence the term pump and dump.
Yes.
Right?
Yeah, you pump the stock up, and as the stock is going up, you dump your shares to the people buying.
So you have to really be careful. If you get an email, if you get anything and you see in the disclaimer, like we've been paid $100,000 or we have 100,000 shares of the stock, like you're being marketed to. And someone has put money into the marketing of that stock rather than putting the money into, let's say, the technology.
Right.
Like if you believe in a company, you want to invest in the technology so they can make the technology better. But if you're putting money into getting the stock up, there's only one reason to get the stock up, so that you can sell, right? Or the company can do a financing and then pay the management excessive salaries and stuff like that.
And sometimes these are legitimate companies. Actually, one that I was reminded of just a few days ago on Twitter is WTER, the Alkaline Water Corporation. Yeah. They're on the NASDAQ now, a completely legitimate company. They sell, well, legitimate if you believe alkaline water is legitimate, which I don't think people should drink that stuff.
Legitimate-ish.
But I mean, they have a real business. They sell this stuff. And but it was also a big pump and dump a few years ago. And sometimes, a lot of times, the company is involved in the pump and dump. Sometimes it's not. The management is just trying to get the company running, and some people behind the scenes own a bunch of shares, and they pay for the pump and they run the pump. And
the company has no.
And they may have the people running the company have no clue.
Yeah, and sometimes the pumps actually work out. True Religion Jeans is a Vancouver old pump, but now they actually have a store on Wall Street, like right around there. And I'm like, why are you selling True? I think it's just to rub in, like, we were a Vancouver pump, now we can sell jeans anywhere, Wall Street, right? Yeah. Like, and that one works. So don't just think like just because it's being promoted with email, like it's guaranteed to go down. What would you say the odds are of it, like a promotion working? Like, is it 0.1%? Is it 1%?
It's 0.1% or less. Because again,
so you have it. So what you're saying is you have a chance.
Have a chance, a really bad chance.
Right?
But I think I forget who it was. Some governmental agency. I think it was someone in the SEC. They did a study on promoted stocks, and they found like the average return over a period of a few weeks was like negative 20% or something.
And what about over a few months? Negative 80%?
It was worse.
And over like a year, like negative 95%?
Yeah, it's just horrible.
Yeah.
And so you don't want to believe in the company.
No, so this is good. Please share this video with someone that you know if they've been involved in a penny stock that has gotten crushed. Like, we might be able to educate them. Sadly, we get a lot of students, like I look through all the DMs and emails and everything. We get a lot of people like, oh, I lost all this money in XYZ, and then they read like one of our blog posts or they see a video lesson that we did on it trying to warn people when it was being pumped, but they didn't see it because we don't have the budget of these promoters. So it stinks when you get suckered into one of these pumps, but at the same time, it's a useful education. I've never met anybody who's like, yeah, I lost all my money in a pump and dump. I'm going to invest in this other pump and dump. Like, you remember that pain, you remember that loss. And if you look at some of these other interviews that we do, those big losses crystallize your education. You had a big loss, right?
I've had a few big losses.
But they've crystallized your education. Now you don't make those mistakes anymore.
Yes,
right?
Hopefully different mistakes each time.
Well, you live and you learn. But you got to remember those losses and you got to, move on from them. So leave some comments underneath this video. Michael and I are going to be doing more videos because he is so excited to be on camera. He just can't contain himself. Leave some comments. We'll answer your questions. Congratulations, man.
Thanks.
It's good to see you, and congrats on all the success. You guys study up. It's not an easy game. Most traders lose. Study as hard as you can. We have so many video lessons, DVDs, archive webinars. We give live webinars. Join the trading challenge. Click the link below. Only if you're serious. If you're lazy, fuck off. Hey, Tim Sykes, Millionaire Mentor and Trader. Thank you for watching my videos. I hope that they help you. I want to share everything that I've learned over the years. You can check out more videos right over there. And also click subscribe so that you can watch all of these videos, get that knowledge, and become my next millionaire student.